The 145% US tariffs on Chinese imports and 125% Chinese tariffs on US imports are going to affect consumers in both countries, immediately raising inflation. And very soon it's expected that consumers will change their spending patterns to adjust to the new reality.
This constitutes a significant tax hikes on US business and US consumers. And that in its own will lead to much weaker spending from consumers and businesses, and thus leading to this recession.
While markets seemingly cooled off from the panic selling of last week, the situation is still said to be volatile, given the way policy on the key matter of global trade is communicated, with the existing US 10% import tariff baseline already viewed as problematic.
And I think from a market perspective, and certainly from an analyst perspective, the world, the tariffs are not over. And just because we're getting a little bit of relief and it looks like we've seen them roll back slightly, 10% blanket tariff, reciprocal tariff is still very high. It's still a shock to the global economy. Banks like JP Morgan, for example, are giving around a 60% chance that the US will go into recession purely because of these tariffs. So while we have seen some easing, and I think the kind of initial panic from last week has subsided, we are certainly not out of the woods yet.
Echoing the view of some, Elle says if the market continues to sell off substantially during this uncertain period, there's a chance that the Fed could step in to provide liquidity to boost market participants' confidence, especially given concerns around the US's growth prospects.
We've seen in past crises like the global financial crisis in 2008-9 and the COVID crisis in 2020, that when there's such a crisis, they actually start off the cutting cycle by significant cuts, 50 or 75 or even 100 basis points. I don't think 100 or 75 is that likely, but certainly 50 to start off the cutting cycle, especially when growth over the next few weeks and months become much weaker in terms of consumer spending. Retail sales will be watched closely, etc. But already last week we saw a significant slump in consumer sentiment to one of the worst levels on record since those consumer sentiment surveys started in the early 50s. So already consumers are indicating that they're very scared about the future. And I think if this continues, then the Fed's cutting cycle could start in all earnest around June, July this year.
Meanwhile, the rand has gained some ground against major currencies, trading below 18.90 against the US dollar. This was attributed in part to indications that there had been a greater meeting of minds within the government of national unity. Nampamela Siziba, SABC News, Johannesburg.